Welcome, students, to lesson number 8, and here we take up the fourth and final financial statement of cash flows. The statement of cash flows is organized along different sources of cash flow or funding coming into the firm. They are as follows: the operating activities. This is what the firm does as a business. It's the product or service that it sells and the revenues that result from that activity. There are also investing activities. Firms sometimes invest in various physical and financial assets, and the rate of return from those loans and so forth is recorded under investing income. And finally, there is what's called financing income. There are two sources of financing. The first is sales of stock, which we have learned to call equity finance. And the second is loans in the form of bond sales by the corporation or loans from banks or private parties. We call this debt financing. And the chapter will take a look at, again, the issue of balance between equity and debt finance and how that impacts the other financial statements, the cash flow statement, and tax considerations as well. So our statement of cash flows then is organized along these principles in that order: operating, investing, and financing cash flows, and then a total return. The income statement is often categorized in the same fashion, with the different incomes kept separate in that, as we noted earlier in our treatment of the income statement. The reason for the cash flow statement is interesting and not totally clearly explained in the chapter. In accounting, we have a number of principles that we attempt to adhere to. There is a hierarchy here. Some principles are more important than others and take precedence. One of the most significant principles of financial accounting is the matching principle. And the goal there with the matching principle is to match revenues and expenses in the same time period in which they occurred or in which they took place. This then loses a certain amount of information from the financial reports, namely, what about the cash component of those spending and receiving activities? The firm must keep a positive cash balance at all times, and the idea here is, in order to do business and to take advantage of opportunities as they arise, a firm should have sufficient cash to make that happen. Anytime cash flow is interrupted, it severely interrupts the activity of the business, with the possibility of causing a complete shutdown and bankruptcy. So we want to keep the cash flowing, and the cash flow statement allows us to examine those flows of cash and to determine if the firm has enough short-term liquidity to maintain its expenditures and enough long-term solvency to continue on in future years, given the burden of its long-term debt. So long-term debt is always an issue with the firm, and the cash flow statement helps us to analyze where we stand with regards to cash flow. The chapter exercises come from chapter 12, and they include the following: 2A, 4A, 8A, 11A, 15A, 17B, and 18B. There is no comprehensive problem to complete. However, there is an online quiz, the final quiz. It's the same as all of the others, 10 questions. And with this quiz and homework assignment, you have completed the first and introductory course of accounting, which is foundational to all business activity. Upcoming courses include the Accounting 200 course, which will be offered in the fall. That course covers what we call cost accounting, or in more recent times, managerial accounting. It differs considerably from financial accounting, and it comprises the second half of the Introduction to Accounting Methods and Activities and Principles. Following the first two introductory courses, which would be a minimum for the business major, we have additional accounting courses being offered here at IAU. The intermediate accounting course, there are two of them. Intermediate accounting is ACC 300. We have two courses there. And then there is an advanced course in what is called auditing. The auditor is an accountant with a very specialized task, namely to check the work of the accountants who work day to day preparing the records of the firm and the financial and managerial reports. The auditors come in and check for accuracy and honesty, and that also consists of two courses. The call numbers I have forgotten. That is only being offered this fall one more time. Of course, if there's sufficient request, we will open up sessions of that course later on. But that is the progression of courses at IAU. We have 3 years of accounting practice available, and this would be excellent preparation for the student who is considering taking the CPA exam. Basically, a CPA exam will confer on you the title of Certified Public Accountant, and you can put the initial CPA after your name. This is quite significant. It basically means you're worth about $100,000 a year or more in the open marketplace given today's conditions. So CPA is an excellent way to advance your business career. The testing is a bit strenuous. There are actually 4 sections on the test, a total of 28 hours. This is usually conducted over 4 separate days or 3 separate days, depending on where it's being offered. It is a state-issued and licensed examination, so the state of California controls it. And those fortunate enough to hold a CPA are able to command a significant wage on the open marketplace, or to set up an independent accounting practice for themselves and to go into business entirely for themselves rather than working with someone else. I would recommend that if you're over 40, it might be a good time to consider going into business for yourself. If you're still approaching that benchmark, it'd be a good idea to gather a bit of experience with somebody else who has an established practice, so you see how things are done correctly. So this concludes our introduction to accounting. I look forward to issuing your grades shortly and seeing you in the fall for further classes. It's been a real pleasure, and thank you for attending and working so hard for me. I do appreciate it.